Welcome to Silicon Valley Impact, where business insight meets startup innovation. Brought to you live from Silicon Valley, California. Please give a warm welcome to your host, Brian Sparks!
And yes, if you were in the studios, you would see the sparklers and the t-shirt gun going off. Thanks, Brian.
I wasn't going to use it, but now I'm just so excited to be back.
Bring that energy. I love it. live from New Orleans. Yeah.
Oh, wow. Crowd's still going. How are you, Brian? It's nice to see you. It's been a couple of weeks. I don't know. People must have noticed that we weren't around for the last couple of weeks, I'm sure.
Yeah, I was getting hate mail. Where's the show? I can't function.
I can't live without you. You're my only reason to be here.
Yeah, you're ghosting me. You're traumatizing me. All of that. No, we are here and we're back after a couple of weeks on vacation. Brian, you were riding around the desert a little bit, huh?
Spent a week in Joshua Tree, where it's an interesting place. Saw a guy I hadn't seen in a long time, and we saw the stars and the rocks and the Joshua trees.
Nice. Good times.
Yeah,
Good times.
Very cool. And I know we have somebody here, but I better hear about his first impression of the West Coast or the Bay Area.
Yeah, we've got the Withum crew here, and they're coming. Some are here from West Coast, others from the East Coast.
And I want to hear one more thing.
Yeah, I know.
I know you've been really busy the last couple of weeks. So there were a couple highlights for you too. Where have you been? What have you been doing? Tell us how in demand you are.
Yeah, I am super pumped about our newest venture partner with Stack Ventures. They have just launched a brand new 39-story building in Oakland. They purchased the 20-story old Kaiser building and the parking garage. And this city within a city is really going to be where the startup ecosystem is going to land. We're going to complete the tech triangle between Oakland, San Francisco, Silicon Valley. If you go back in our archives, you remember when Colin Baring was here. He is the CEO of Stack Ventures. We have developed a partnership, so that's going to be exciting and a lot of things to come there. We're going to do events and really activate that space for a global venture partner.
And just that episode alone, the project is fascinating. He was, just extremely knowledgeable and informative, and it's worth a listen.
Yeah.
Yeah.
And we've since been at Startup Grind. We've since had a few events, and we got more coming up. So stay tuned for that. But Brian, I forgot one thing. I forgot to welcome our audience.
Oh. Yeah, right.
Yeah.
Back here.
Yeah.
We've got somebody. We've got one guy.
Brandon.
Except for the people you can't see on camera that are behind me.
Yeah, so I'd like to welcome Brandon and everybody to Silicon Valley Impact. I'm your host, Brian Sparks. The purpose of the show is to have honest conversations about what it takes to build great businesses and communities so that you can make an impact
with your own.
Yes, in your own.
All right.
Get into it, Brian. You'll see that little shot on YouTube.
I'm on camera, performing to the camera.
So look for that soon. We will be uploading a lot of episodes to YouTube, so you can check us out there. Follow us on Spotify and Apple to listen to all our previous episodes. All right, let's get into this, Brian.
Yeah,
enough of the shenanigans.
I'm ready.
Okay. All right, so I want to welcome in. We have 4 guests in the studio today, and I'm getting a little anxiety because I am not a numbers guy, but we've got number guys in the house. Got a couple of them who've got good numbers on the golf course, if I might say so myself. We have Tanner, Tony, Danny, Brandon. Good to see all you guys here. I'm going to let you give your own intro because not only are you experts in your industry, but you're great people. So I'm super excited for you to be here. Dan, I'll start with you. Good to see you, man. And I love the shirt too, by the way. Where can I get a Withum shirt so that when we promote, I can wear it?
I'll send you one.
Love it.
We'll get you a couple, Brian.
Yeah,
happy to get that to both Brians.
Cheers.
Get you guys some swag.
We're swag snobs, so we love good stuff. You guys got good stuff.
All right, cool. Yeah, I mean, you just got to make sure you wear it a lot. That's the only thing,
I'll wear it out.
If Tanner sees you not wearing it, you'll find out.
It's a short ride.
Oh, wow.
You got to wear it on the golf course, too.
Oh, I will.
But yeah, no, thanks for having us, Brian. Dan Krolikowski, co-team leader of our Founders and Tech Executive Group. So, used to just helping, founders, executives with compliance, planning, and you name it. We just try to provide solutions as much as possible.
Love it. Love it. Glad you're here. Tony, give a little intro.
Yeah, similar to Dan, Tony Panico, co-founder with Dan of our founders group. Again, planning strategies for, we saw a need years ago. In addition to the business, people weren't really thinking about the founder. So it's kind of where we focus our efforts.
Nice. Love it. Tanner, what's up, buddy? Good to see you, man. Love what you're doing with the hair.
Good to see you too, Brian. Yeah, we have been visiting the same barber, I guess.
Yeah, love it.
Yeah, but I'm Tanner Ellis. I am on our business development team for our technology niche. So work with Dan and Tony and Brandon a lot. Really just try to add value to the startup space, right? Work with a lot of our founders and our startups on any tax compliance, audits, accounting needs they might have, and help them scale.
Nice. And Brandon, you're back there. We can pick up you on mic, but say hi, wave the camera. Glad you're here. All right, so there's a lot of ground to cover. The reason why I'm having you guys on, Tanner, Brandon, known you for a while. I don't do well with numbers, so I had to have you guys on. But before we get into it, you gave your roles. You gave kind of your niche and where you work best. But talk a little bit about what Withum is as a high level, and then we can kind of drill down into your area of expertise. And I will start from my right to my left. Dan, a little kind of high level of what Withum is.
Yeah, happy to explain that. Can I also answer my first impression of San Francisco?
Oh, yes, please.
Let it rip.
So I get out of the airport and I wait like 25 minutes for an Uber, and I'm like, where's the Uber? Aren't they supposed to be coming like every 5 minutes or whatever? So that was my first impression, that it was windy, and there was really no Ubers at the airport to find.
Oh,
so.
wait, but we're not. But SF is not really Uber. It is, but you haven't seen the Waymo.
The Waymo. I
Waymo.
found out about that, and I heard they're making that bigger and expanding that at the airport, hopefully, maybe at some point. So looking forward to that.
All
but
right.
First night
That's
in
the
the city
government
was great.
getting in the way. But I would like to just sort of echo this sentiment that you can be in the middle of Silicon Valley, in the heart of the tech universe, and be someplace where you can't get an Uber or your cell phone doesn't get reception. Right? Like, how is this possible
What's
that
going
I'm in
on?
the middle of San Jose and I don't get reception on my cell phone?
Yeah, let's fix that.
We're the hub of the universe.
Yeah.
So yes, please, Uber, get on it. Thank you.
And then the other part, he talked about the wind. Don't let that fool you, because you'll leave San Jose in shorts and need a jacket in San Francisco.
Yep.
And an umbrella. Yeah. So you gotta come in layers. So there's really that.
Well, it's been a great day today. But in terms of Withum, I think we're the number 22, biggest firm in the country right now. Because of that size, we all have specialties in different areas. So like every big accounting firm, we can assist with, tax, audit, and other consulting solutions. But specifically, we look to just, help provide solutions to clients in various aspects, whether, it's internally or externally, so to say. And we generally go to market based on industry. So, everybody here in this room has a big, knowledge of the tech industry in general. Mm-hmm. And we all sort of specialize in specific areas within tech.
Right. I was speaking at an event this past week, and man, it escapes me where I was at. But I remember I'm constantly championing the service providers, the accountants, what you guys do, because startup founders get in this game and they have their area of expertise, and they got to really lean on you to come in and fill the gaps where they're not. And so for those of you who are listening and you're getting ready to build out your startup, launch your startup, or yet there's holes, these are the guys that really step in those spots to give you that area of expertise and take that weight off your shoulders. Because, startups, they got enough on their plate.
Yeah, there's so much going on. You're wearing so many hats that, you want to, and you may not have expertise in a certain area. So you got to figure out, and I think one thing as a startup is finding the right people to do the right things and help add value. So just looking for ways to add value.
Yeah. So I always ask this of my guests, and then we can launch into all these areas that you and I have been talking about over the last few weeks or few months to prepare for this. But why do you do what you do? Or not why do you do, why do you love doing what you do? Or what about it do you love? And I don't want all of you. So, Tony, I'm going to kick it to you first, sure. and then Dan, and then Tanner. What is it about being a part of this team and working with the ecosystems you work with that you love?
Working with people, like just helping them provide them solutions they need.
Yeah.
Right. And it's just a good feeling when you can help them and provide those solutions for them when they're trying to advance their company or whatever it is. You get to work with them a lot of times from day one, right? Which is what we recommend, and work with them on a daily basis. We don't like to just talk once a year, twice a year. It's an ongoing relationship, and love working with people and dealing with those relationships and expanding on those, and to see them grow, different ventures they get into, things of that nature.
Yeah.
And to Dan's point with the firm, niche-based firm, but there's so many different areas that we don't know, right? There's different. They may need help in another, something outside of the tech, but we have the solutions for it. So the beauty of working with them, being able to provide them with the solutions, and make them feel good about it, and develop that relationship with them, really kind of hits home.
I love that you say, look, we know what we're good at, but then there's things that we're not, and you really got a team that finds the resources to kind of connect your clients to, and I think, Tanner, you've done that really well. You're West Coast, and you're really into the relationship space of the team, at least as far as my experience. But what is it with this team and with them that you have loved so much?
Yeah. Well, the team, it's the people, right? The people is great. The culture is great. But I think the space that we're in the startup space, there's so much innovation. And when you get to work with founders on a daily basis, and you hear their ideas and how they're trying to make impacts on the world and make a difference, right? And if we can help them, it's win-win. And the group that we work with, our culture, it's very collaborative. It's a great group of people. It's a national firm, but we're trying to build out our impact here in Silicon Valley and put our stamp on the Bay Area.
Yeah, I love that. And so let's get into it now. Let's really speak from the perspective of someone who is in startup right now. They may be looking to launch. They may be just looking to raise. They may be moving towards Series A. Where do we begin with this? What should we start learning first? If I'm the startup, putting words in the mouth of those listening, where do we begin with this when it comes to understanding the current climate of accounting? Where do we begin with this, Dan?
Yeah, no, absolutely. So, I mean, if we're talking about like sort of the earliest thing to do, it's probably thinking about, not after the idea and things like that, is thinking about entity type, right? Formation, there's pros and cons based on, what your end goal is with the company, in terms of selecting a certain entity and how that will affect your income taxes. So I think, the biggest thing to kind of consider is, what is like the strategic vision for this company? Is this something that, hey, I'm looking to, raise capital and theoretically sell in the short, near, long term? Or is it something that, hey, I think that, I can kind of create, some value here and something that I theoretically want to, hang on to, so to say. So I think that's the first thing. And then otherwise it's kind of looking at, hey, what are we going to, be spending our money on, so to say, and looking for other opportunities.
But with startup moving so quickly and pivoting and changing direction, does that need to be locked in? So say, for example, I'm just looking to build out my idea and go to market. I don't have an exit strategy yet. I'm not thinking acquisition or merger or any. I just want to get there. Can that evolve? Can that kind of turn, or if I don't have it all figured out, if I anchor myself to the entity, is it going to hurt me moving forward? Dan, I'll look to you to kind of follow that up. I mean,
you could generally change at any time, and again, there's pros and cons to doing that. So I think, people's, plans can change, founders, plans can change, company goals can change all the time. So making sure that, you're having good communication with your service providers, with your professionals, get good advice, and, depending on what the outlook is at that point in time, sort of structure things accordingly.
Okay. Tony, what are your thoughts?
Yeah, that's why we want to be involved from day one, right? Entity structure, right, to your point, they can change at any time. And what works best for me, a lot of time, family planning, estate planning comes into it. What's the best way for me to structure it? I think this is going to be a home run. How can I know we're going to talk about some of the specifics of QSBS and things like that, but how can I structure it to kind of help me and kind of what's my legacy? What do I want to do there? And I want to look into that.
Okay. Talk a little, because I don't want to blow past anything that I don't understand. QB, say that again.
QSBS, qualified small business stock.
Okay.
So the majority, I'd say, right, and step in, Dan, if you think of our clients, they're their startup is a Delaware C corporation. It's advantageous to that. So a qualified small business stock, high level, is you have to meet certain criteria. It has to be a C corporation, et cetera. You can't exceed $50 million in assets from the issuance of the stock. But if you get this stock, once you decide to exercise it and you own it and you hold it for 5 years, when you sell it, your first, we'll say it's the greater of $10 million or 10 times your basis. That's excludable from capital gains. Generally, it's $10 million because when these startups are out there, the basis is at or near zero. So you would be able to sell and exclude up to $10 million of capital gain from your tax return. And when you talk about legacy and estate planning, et cetera, there's something you could do that's called stacking, where you can set up trusts within your family for different family members, and you would get a $10 million exclusion per trust. So depending on where you think this is going to go, where you see it's going, that may make some sense, right? I guess you have to see some control of it. If you set up the trust and move the stock into that, it's no longer, you want to make sure you keep the majority voting power, et cetera. But that's something that you can do as well.
Now, does this all need to be, again, thought out from the very beginning where,
But Brian, I'm going to butt in here.
Yeah.
You're saying it needs to be thought out, but I think from what I'm understanding about having owned businesses and what these guys are sitting here, if you're starting a business, if you're a founder, you should call these guys right away. I mean, wouldn't that be the right step? And this is not a plug. I'm saying, because I know the other business that I run, right? Like they're like, oh, I don't want to bother you, or I'm too far ahead of myself by calling you. And the answer is no. It doesn't cost anything necessarily to start to build a relationship, introduce yourself and say, this is what I want to do now. This is what I want to do 6 months from now or a year from now, and begin to engage, because I'm sitting here looking at guys that really want to build relationships. Yeah. And so we can talk about all this high-level stuff. I mean, a $10 million exemption from gains is amazing, but for the people that are just getting going, they don't necessarily think they're going to get there, but they should call anyway. Am I right?
Yeah, absolutely. And that goes to the relationships that we spoke about in the beginning. We want to develop relationships, and then the QSB as this qualified small business stock, that is a federal law, and not all states conform to it. So you got to be careful. So residency planning could come into play, things of that nature. If you're thinking of kind of moving at some point to a non-tax state like a Florida or something of that nature, all that residency planning comes into play as well.
Go ahead.
And I would just say, to kind of, echo that, Brian, there's some cons to, being a C corporation. Like, investors love it, because there's a separate tax return. However, with the C corporation, that you get this qualified small business stock exclusion, there is double taxation, right? There's separate returns that have to be filed. If at this point, you're a founder, you're bootstrapping the company yourself, and you have losses, you don't get the current tax benefit of those losses. They stay within the C corporation. So again, there may be, consideration in terms of entity classification. It's like, hey, I'm bootstrapping this. Do I wait? Do I be a single member LLC right now, be able to deduct tax losses, and then, kind of convert in the future to a C corporation? So there is a lot of considerations, Brian. Everybody hears that $10 million exclusion and is like, hey, I got to go this route, so to say. So that's usually, the big draw. But there is, a lot of factors in play that we, want to guide. But always happy to make relationships early and, assist with that kind of stuff.
I would imagine you guys are there to answer all those questions from the get-go. And what I find with small business owners often, or people who are just getting started, they're so busy working in the business that they forget to take a step back and work on the business. And if you're working on the business, that means having a plan and procedures in place for the future, which includes you guys.
Well, let's back up, and because I want to talk first. Let's go wider out, the financial planning of this. One of the things that we were talking about in the beginning was the emotion and uncertainty of kind of the early stages. I mean, we're already overwhelmed with what we need to do as a startup or small business. And a lot of people will hear $10 million and say, I'm not there yet. I just don't have the capacity.
Yep.
And so when it comes to the uncertainty and fears that people may just be pushing out, how do you start putting in some of the, relationships, obviously, putting in those guideposts to set people up for success further down the road? Like, what questions or approach should those early customers have?
Yeah. And that's where I think, a lot of it comes down to, like, hey, what's the purpose of this company? Right. What's our short term, medium term, long term outlook? And then, I think you also look at, what does the company need to spend money on to get to be successful, right? Because depending on what the company has to spend money on, whether it's people, whether it's supplies, whether it's, doing R&D, whatever it is, there's different tax benefits to those things. So I think it's really looking through with a person and saying like, hey, if we look at just today, this is maybe what we think about. If we look at, short term and medium term, what do we look at? If we look at long term and try to blend all that stuff together to put together a plan. And a lot of times I think it's not a plan that you're just going to put together day one, Brian. It's something that, hey, we started out here, let's meet regularly, let's have great communication and figure out, where we at, in 3 months, where we at in 6 months, where we at in 9 months, and then just trying to be, dynamic and kind of make changes to that in real time. Obviously there's a ton of factors, internal, external, that can go into these startups. We obviously, right now have sort of, a sunsetting of the current, tax law at 12/31/2025 and probably new tax law. So, I think it's just making sure that, you are thinking about things in real time and it's constant. It's not just like, hey, I have one plan and that's it. I'm going with it forever, constantly updating it.
I love that. So Tony, tap in on that. These early stages, again, startups just don't have the capacity. They may not have the resources, but yet they should be taking the time to understand what's going to set them up for the future. And what does that look like working with you?
Yeah, and it's communication, right?
Yeah.
We love to kind of deal with clients, again, not just once a year, as often as we can throughout the year. What I tell a lot of my clients is, you may not think it affects you from a tax perspective doing something, and it may not, but fill us in, let us know, right? Because you want to learn where they're kind of going with it. To Dan's point, what do you want this goal of the company to be? What do you want to look like in a year, 2 years? When would you think you're going to want to sell? Because we don't want you reaching out and saying, "Oh, I got a letter of intent to sell next month." We want you to reach out early. Tell us about it. That's why, I think it's all communication again, go out to that and building that relationship. So you can learn about not only their business, but about them personally and what they want to do and what they're looking to do. So you can kind of move accordingly and get in the right people to help them do that.
All right. I'm going to trot out one of these buckets that I've been wanting to talk about. And that's the topic of tax return reviews. But before I go there, I want to, for our audience who are considering, okay, we should go to any one of you, go to Withum, go to a competitor, whatever it may be, to talk to somebody, versus, well, I'm just going to use ChatGPT or one of these automated systems that are popping up all the time. Then I don't have to deal with, the unknown. I don't have to deal with a person. What do you say to that person who says, well, I'll just use this automated service, insert whatever AI they have access to, as opposed to coming to you and communicating and establishing that relationship? Is there a differentiator in that initial decision to go from machine to person?
Yeah, I think it's emotion, right? There's nothing like a personal touch. I mean, we've talked about it. It's not always right. Also, when at all times, there's different nuances depending on how you enter a question or what you're looking for. But the human element, I think that emotional relationship together factors in a lot, because you know about the person and what they want to do.
And, to kind of echo that, I'll kind of answer with an example, Brian. I've been trying for 2 years to Google and figure out, how to make my lawn look perfect, make it look green, make it have no weeds, no crabgrass, no anything. In 2 years and probably a ton of money later, I finally have a lawn guy that, I trust, and everything's perfect. There's no questions. It saves me a ton of time. It's saving me a ton of money in the long run. So I kind of think about that. I think about, hey, every time I got car trouble, right? Am I going to sit there? Am I going to Google something? Like Tony said, it may not even be right, with ChatGPT and AI, or am I going to go use a professional, save a ton of time and money, kind of build those relationships? And, I think that's part of being in the startup community, having a new company, as well as you're building a ton of relationships, you're relying on people to do different things. So kind of think of it in the same light as well.
Okay.
I want to add in there one more thing, Brian.
Yeah.
Sorry, I startled you.
Yeah. So who said that?
Also, I think that people should just be focusing on what they're good at, right? Like you going to learn how to make your lawn perfect is not really your wheelhouse. It's not something you should be doing. And if you leave it to an expert, you don't have to think about it. It turns out perfect. You probably didn't pay that much anyway. And you can stay focused on what you're good at and earning in that vertical for yourself and not worrying about having to do all of everything all the time.
Yeah.
One last example, Brian. I always tell my wife that we have an issue if I have to be on a ladder on the roof of my house. Something's going wrong. So, I'm always going to call the professional for that.
That's a smart choice.
Exactly.
Yeah, a number of weeks in the hospital is not going to be good for your business.
That's why you call the guy, right? Call the guy. That was what
Call that. Yeah, I got a guy. Yeah, I got a guys. Yeah.
But these guys are the guys.
Yeah,
They're
you're
there
right.
for a reason, which is like what we say. We're there. Use us, right? Utilize us for that.
So Tanner, I want to, and again, I want to get back to the tax return reviews. What's that look like? Because again, someone could go a year and then all of a sudden it's time to have this conversation. There's that review moment, but yet the difference between those who just show up and say, "Hey, let's talk," versus those who've been talking continuously. I definitely want to talk with Tanner really quick. You're constantly customer facing. You're constantly out there listening to what the pain points are with customers before they actually come on. And so, or come on board and start having those deeper conversations.
100%.
What are some of those conversations you're having that are top of mind for you that people go, the timing's not right, or not for me, or I got another guy, right? I guess, and that guy is ChatGPT or whatever. But what are you hearing out there is the resistance and I guess the fear behaviors of people not engaging with a professional?
Yeah, I think it's a few things. Right? Taxes, compliance, they're kind of scary terms, right? Audit is a scary term. You don't go out of your way you don't wake up in the morning and say, "Hey, I can't wait to pay my taxes," right? So if you're a founder, you've got a million other things you can be focusing on. You're trying to grow your business, trying to generate revenue. You might be hiring, you might be fundraising. What we do, it's not the sexy part of the business, right? So when I'm having conversations with people, I think it's very rare that you strike up a conversation and they're like, "Yeah, I've been waiting to talk to someone about taxes," right? Mm-hmm. It doesn't happen. Mm-hmm. I think part of the resistance is just it can be a scary topic. People are scared of what they don't know, right? I don't like to file my own taxes. I don't claim to be an expert or a CPA like these guys, so I kind of shy away from some of the more technical questions. Mm-hmm. So we try to make it approachable, right? And we try to develop the relationships early on so that when it is tax time or they finally realize that they do have to really get a plan for an audit or they need some bookkeeping help, they're going to think of us. Mm-hmm. And we make the situation less scary. We've got people that, Dan and Tony, they do this 12 hours a day, 6-7 days a week. So there's nothing they haven't seen before. Yeah. Right. And I think that's one of the values that they can add to their clients is when you're a founder and your startup's your baby, it's your whole life, it's your passion, it's all you think about. And then you have a conversation with Dan and Tony that they're talking to 12 or 13 of you every day. They can help bring other perspective into that conversation and maybe add some value because they've seen it all before.
Yeah, I like that. So let's talk about some of those values and some of those practices. And I want to start with the tax return reviews. Like that's usually where I'm thinking you're getting the influx of people. That's where the bottleneck is. Like everyone's coming in. How do you set yourself up for success during these tax return reviews?
Yeah. I sort of think of a tax return review as sort of just one part in sort of like, when you go to the doctors and get a wellness checkup, right? So think of like the tax return review as saying like, hey, this is sort of like a snapshot of what, a business or a person sort of has going on or has reported what's going on. And, is there ways that we can, kind of tweak, what's on this tax return to either provide some, benefit, whether it's tax savings, or is there another way to, sort of optimize something? So generally, the first sort of step is generally talking to people, right? Mm-hmm. But then after that, it's sort of, checking under the little bit, whether it's a tax return, whether it's financial statements, you name it, broker statements, and trying to say, hey, this is sort of what we see is going on. If we can, make some tweaks, there can be this savings or this benefit.
Yeah. And so what do they need to, and Tony, I'm going to look to you. What should they be bringing to this? What should they be preparing throughout the year? What is, there's those who come in healthy, who've had the conversations, they've kept everything in order. And then there's those who come in and say, hey, I don't have anything with me. What do I need to do? And we got to file. I mean, how do you set yourself up for that?
Yeah, that's you kind of have to work with them from the start and mold them. Like a tax return review that provides you a basis of how to guide the initial conversation, right? You want to know what they're doing, what's different, what have you done differently this year than you did last year? How does that affect you? So you could set them up and make sure they're, staying compliant and up to date with their tax payments, things of that nature. But use the return, like to Dan's point, it's one part of it, right? We start these conversations, an initial conversation with a prospect or whatever it might be. If we have the return in advance, great, because then we could have those leading questions and ask them right there. Like, do you have this brokerage account next year? What are you doing here? Did you exercise any stock options? Because you could see, certain things on the return can tell you that they do have stock options or they have something where you can, you need to look at it. So it provides, a good basis for where to go with it and lead those conversations with those clients to find out where you need to go. Right? You could go a variety of ways depending on how they answer.
I love that. And so we're going to take a quick little break, and we're going to go a variety of ways when we come back. We've kind of played it soft up to this point, how to think about approaching Withum or dealing with your numbers. But when we come back, we're definitely going to dive into some of these buckets where for those of you who are listening, you're going to get some insight. So Brian, take us away. We'll be right back. All right, we're back with the second half of our hour. We're here with the folks from Withum. Again, when we go to commercial break, the energy comes out, the insight comes out.
I know. You stop the recording, and all of a sudden, everybody starts talking
It's like,
so
I do that.
deep and genuine, right?
Y'all
Like,
need to
not that we're
calm
not doing
down.
that on camera, but it's just weird.
Yeah, I love it. And so we're back. We're going to try to capture some of that energy, but we got a lot of ground to cover. Tanner, during the break, we're talking a little bit about how well you guys are building community, and then we're going to roll right into. I thought what was fascinating was that ChatGPT test you were talking about,
Yeah,
Dan.
do that story over, Dan.
Yeah, so I can explain a little bit. We were just saying how great AI is and what a great tool it is, but it's not always right? So a lot of times it's taking information from, different sources, which may not be right all the time. We actually had ChatGPT or maybe a Microsoft Copilot write an article all by itself about tax loss harvesting for cryptocurrencies, and it was a great article, but unfortunately it was the wrong answer, and we had to have a person actually rewrite it. So it is sometimes be wary about what exactly you're getting from those AI tools.
Yeah, because Brian, you were saying that, there's so many intelligent people in the world in Silicon Valley that if you can put it on a screen, people just figure it out themselves.
They're really, really smart, and they're good at everything, and they think they're supposed to be good at everything.
Yeah.
And if you can bring it up on your computer screen, then I can do it myself. So TurboTax, I was saying, is a real Achilles heel, I think, for people.
Yeah. And then Tony, you were saying that no, that shows up in your office, and you go, no, that didn't work so well.
No, they all jumped in and said, if we can get a hold of one of those tax returns.
Yeah.
I had a client recently say, hey, I love you guys, but I made a new investment in an AI company, and I'm gonna have them, I think if you guys don't mind. It was funny. He asked us if you guys don't mind, it was our decision. It's we're not married or anything. I'm gonna have go to this firm and have AI prepare my tax returns, and I was like, if you can get AI to prepare your tax returns, we probably need to buy that company right now. So it was funny. We ended up preparing the tax return again this year, and I think we will for the foreseeable future. So I think, there is a lot of great uses to it, but, it'll probably take a little bit of time before it has all the answers.
And we thought years ago, I think we thought it was going to be more prevalent now in preparing tax returns when talking about the 1040, but it hasn't gone that way.
Partly because it doesn't ask questions, right? So you're going through, you think you're answering the questions, but in fact, it's not saying, as looking one human being to the other across the desk or on the phone or whatever, hey, what about, didn't you say you had this or that or the other thing, right? You heard a little something and picked it up, and I don't think the robots are doing that quite yet.
And that goes to the communication and relationships that we talked about earlier. The human element, there's not, I'm a little old school, I'm a little older than all these guys here, but there's nothing like that.
Yeah, not all of us. Go ahead, Brian.
No, I thought you were going to trot something else out. Okay, but I would definitely want to get to the question I was going to ask Tanner, because again, getting beyond this resistance to use the service provider that are experts in specific areas. I mean, and it's not just accounting. There's a ton of other areas that people need to kind of cross that threshold and say, I don't have to do this myself, or I don't have to push it into the dark recesses of my mind and do it later. I can delegate this to a great team like you guys have, and they could position you for success. Tanner, you do a lot of events. You put a lot of time into building community. Talk a little bit about that, because again, Silicon Valley Impact, we love community. How have you gone about doing that? And then that kind of brings in those new clients that you can build trust with. Talk a little bit about that.
Yeah, absolutely. I try to be authentic. I try to add value, and really when I meet a new, if it's a founder, if it's another industry partner, if it's a VC, I'm looking to see how I can help them out, right? I'm trying to see how we can develop a relationship. Can I make introductions from my network to help them? Are there events coming up that I think they should know about? If it's a founder and I know a company that's building something similar, I'll try to make the connections, right? So I'm just trying to give away as much as I can, right, with my knowledge and my network, and just I think just being authentic and being yourself, and really just trying to develop those relationships, and not going out and saying, "Hey, you should sign up with Withum," right? I think it's a relationship business. To Dan and Tony's point, it's about communication and people, but it starts with the relationship on day one and making that deeper.
Okay, I got to ask this one more time. I may have heard it already, may have asked it already, but again, it's always in my mind. And being 51, I start to forget what I ask. Your focus.
Everybody's happy.
So, those who are listening, your customer. I'm thinking of how many employees or how many people are on someone's team. Do you help everyone from the solo entrepreneur on up to a larger, or is it like, what's the range? If someone's listening, like, hey, I'm just by myself, I don't need you, or maybe I'm too big and I don't need you. Where's that range land?
We can run the gambit, right? I mean, you know, Dan and Tony's practice, it's all founders, but you're servicing the individual, right? And our firm, we service large companies, public companies. So we go from the solopreneur all the way to the public company. So
you can look at the tech group itself. Has three divisions. It's a financial statement audit. If you're big enough and you need a financial statement audit, we have that. We have the business side of things with corporate tax group, and then Dan and myself on founders and tech executives. Okay. So right in there, we can do that number of things, in addition to all the service lines that Tanner's talking about that feed into it.
Okay. So I got to ask this, because when we sat down, Dan, you were talking about all the new things that are going on. So let's make that leap. So we've been talking community. We've been talking about a little bit of fear, kind of the basics and what they should bring to you. But let's make that leap into what's new in terms of tax proposals, TCJAs. What's kind of happening now that we could take home and share with our team?
Yeah, no, absolutely. I mean, I think, you know, one thing that's sort of, you know, out there right now is just, you know, the current sort of economic climate. You know, I think valuations are down a little bit. I think, you know, interest rates are you know, could theoretically say they're high. You could theoretically say they're low, but I think they're at a 1-year low. So there's probably things that, you know, you could think about in terms of, hey, I should do this because of the current economic climate. When valuations are down, sometimes you're thinking about, do I exercise equity compensations? Do I do Roth conversions? If you know, just took out a mortgage, you know, in the last year and interest rates have dropped, maybe you think about doing a refinance. The other thing that's sort of happening, Brian, is, you know, at the end of this year, the current tax law, the Tax Cut and Job Act, sunsets. So a lot of the provisions go away pending a new tax law. And the House Ways and Means Committee just came out a couple of days ago with their, you know, budget that theoretically.
Give me an example, because I mean, I get the containers. Like, give me an example of what's being sunsetted, and then what's the exchange, and how does that impact, you know, that solopreneur or someone who is driving us. Can you give us a high level example of that impact? Yeah,
absolutely. So, I mean, from the business side right now, you know, a lot of, you know, startup companies have what they call research and experimental expenses. So previously you got to deduct all those expenses. That basically had sunset previously. a year or so ago, and now you would have to amortize if they were U.S. costs over 5 years and foreign costs over 15 years. So the new tax proposal that's come out has basically said, hey, if you have U.S.-based research and experimental expenses, you can fully deduct them, in the year that you expense that, you spend the money on that. So, what we have seen is companies that are pre-revenue really weren't affected, by the research and experimental costs, but companies with revenue where they thought they'd actually lost money on the books for tax purposes, they made money. So they should hopefully, assuming this gets passed, bring things back to where they were, where companies weren't taxable, and hopefully they can use that cash for, future growth and future opportunity.
Tony, add to that. I seen you going, yep, that's true.
Yeah, it's affected a lot of our clients that, because when you got to the point where it said, I lost money, I'm not going to owe taxes this year, but wait a minute, hold on. What were your research and experimental, what was the amount of that? And when you go through a whole study and you realize that you have to add back and you have to amortize a certain amount of these costs rather than deduct, and it puts you into an income situation. And all of a sudden, corporate tax rate 21%, there's limitations on net operating loss usage, things of that nature, where you can potentially owe some taxes on it. So it's significantly hit our company, our clients over the past 8 years or so, whatever it's been, 2018.
I feel like collectively in 20 countries, people just leaned in and go, wait a minute, what? Because again, that's the blind spots of not having these conversations about, what I can do with expenses, what I can do with assets, and people get caught off guard. And so talk a little bit more about what some of these how these changes will and can affect these startups in the coming year.
Yeah, I mean, to Dan's point, then now that they'll be able to deduct that, and it won't push those certain companies into an income position. They're going to have that cash to do what they want with it, to further their business, put it back into the business, right?
And so I just have to grab onto that. You talked a little bit about contributions. You talked a little bit. We haven't talked about it yet, but Roth conversions. Does this kind of play into the factoring of what you will owe and not owe? Talk a little bit about the contributions.
Yeah, absolutely. So I think, from what we were just talking about was more like business specific. And there's other, business things. Like right now, there's something called bonus depreciation where you can only, deduct 40% of a capital asset cost. They're hoping to make it 100. Things, like a Roth conversion, for example, would more affect the founder, right? Or an individual, so to say, in their tax planning. So there's multiple ways to look at this. We don't try to limit ourselves, Brian, in terms of like only focusing on the company and the individual. Yeah. So always see that there's like overlap there.
Okay.
Yeah, and to the Roth conversion point, right? So you're looking, that's an individual aspect where you can take a traditional IRA and convert it to a Roth, right? So whatever that amount is that you convert, it adds taxable income to you individually, and you're going to owe a tax on it. But to Dan's point from before, if you're in a lower income situation for the year, like the market's been very volatile, we know that, right? People are losing money. The cap gains might not be where they were the past couple of years. So maybe your income is down. So if you're going to add taxable income to convert to a Roth, now might be the time to do it. Depends on the situation. Again, you got to see where the clients are at. What's their position? What's their year-to-date interest, dividend, cap gain? It's just a whole slew of things that you got to talk to them about before you make that decision. But it is a current opportunity that you may have out there.
Okay, I have to be honest. I think I may have glitched. I should have probably asked more about the compensations or the equity compensation, or was I off on that one?
No, I think it's all relative, Brian. I think there's things to think about, and just sort of add to Tony was like, hey, if your income's down, that maybe with a Roth conversion, really what you're saying is like, hey, am I going to be in a higher tax bracket, later on versus today, or today versus later on, and sort of make decisions. And, with the Roth conversion, you're saying, hey, I think I'm going to be in a lower tax bracket today than I am in the future. The benefit to the Roth is that it grows tax-free and any distributions are non-taxable to you. So if I'm in a low tax bracket today, it makes sense to pay tax, use after-tax dollars in the Roth. That's the main thing. You also say, hey, maybe I'm in a high or similar income tax bracket today. However, valuations are down. So instead of $100, I can, convert to a Roth with the stock at $10. So instead of paying tax on 100, I pay tax on 10. So there's a lot of considerations there. And when valuations are down, we also think about, equity compensation, Brian, where, hey, if I exercise a stock option, the fair market value of that option, less anything I pay for it, is income to me. So if it's worth $100, when I exercise it and get the equity, I pay tax on $100. If it's only worth $10, when I exercise it, I only pay tax on $10, so to say. So when valuations are down, it's just something to think about. Hey, should I really, think about taking the risk, doing a cash outlay and exercising? So I have options, and I think, Tony, maybe the holding period matters too.
Right, because if you're going to do that, to your point, right, it's a cash outlay. So if the valuations are down, again, now might be the time to do it, and it starts the clock on you owning the stock. And once you hold it a year, well, there's a couple of factors, right? If you hold the stock for a year, you're going to pay long-term capital gain, which is the preferential rates, as opposed to short-term, which would be ordinary income. But also going back to the qualified small business stock, if it is qualified small business stock, you need to hold it 5 years. That's one of the criteria. So you start that clock sooner than later. If you're looking to sell in, however many number of years it may be, you may want to start that clock.
Okay. I love it. So I'm sure that there's a ton of intelligent questions out in the ether of our audience, but I definitely want to talk a little bit about this fluctuation in valuation. I mean, up, it's down. How does a startup, early stage, post-revenue, start thinking about valuation and how it comes to how it determines their bottom line, and how they have that conversation with you?
Yeah, no, great question. I think that, really what the valuation, kind of comes into play is, one, when you're raising money, obviously valuation kind of comes in. You want to get the highest valuation, kind of bring in the most cash for the company. The other time evaluation kind of comes in is when you're issuing equity compensation. You need to value that, because if I provide services for equity, the value of the equity that I receive is taxable, just like if you got paid cash. So a lot of times companies will need to do a valuation for that as well. I think most companies hope, Brian, that the valuation kind of continues to climb. So if there are these times whenever valuations are down, that can, provide some opportunities, for both the company and for the individual.
All right, Tony, because startups are always talking about valuation. How do they keep their finger on a true number?
Yeah, there's different ways you can do that, right? You have card evaluations. You have, like, I know Withum, we have a valuation group, and all accounting firms have valuation groups where they'll do a valuation study for you. A 409A valuation is what they call it, where you can determine what the actual value is at that time.
And that's generally, sort of a safe harbor rule for what Tony's referring to, 409A, where the IRS says, like, hey, if you do a valuation every year when you issue equity compensation, we're not really going to, necessarily challenge that value. You're safe harbored for using the qualified appraiser and going through. So one, it gives the company a pulse on, hey, this is what, we think, the stock, what our company's value today. But also it provides the company an opportunity to actually, give equity instead of cash. A lot of these companies are bootstrapped, Brian, and I'm sorry, cash strapped, so to say, where they want to use the cash for, whatever they need to do to grow the company. So sometimes you can attract talent by, instead of, giving cash for services, you give equity for services and say, hey, you help me grow this thing, in the future, you're going to get a lot bigger benefit than if you were to get cash today.
Yeah, it's a way to incentivize and reward without having a cash outlay.
Exactly.
Okay, I love it. That's good stuff. And again, I want to remind everyone who's listening right now, I will leave contact information in the show notes. And then as we're doing our outro, I'll ask our guests how you best can be connected with them. So that's forthcoming if you have questions. Just to kind of clear the palate a little bit, one of the things that's coming up when it comes to keeping your finger on the pulse of your numbers is refinancing. So real quick, we got a few minutes left. Talk a little bit about how entrepreneurs and those who are looking to launch a company, grow a company, should think about refinancing.
Yeah, we touched on it a little bit earlier. I think, obviously if interest rates are down, right, and you have a higher interest rate, it probably makes sense to sort of shop around and see if you can, have a less of a cost of debt, So say, hey, can I refinance? I think, from both a company and individual perspective, you look for those opportunities. The other thing that you can kind of think about is like, is there other ways that I can sort of raise funds, Brian? Obviously, you can kind of give equity. There's sort of like a hybrid investment type that startups can give called a safe note. And really what you're doing is, I think for company purposes, it would be treated like debt, right? They'd be bringing in cash, but they would basically, give up, a value in the future that's sort of unknown right now, right? So if we basically, the company would take in cash and say, if we have a financing round in the future, we're going to convert, this note to equity at that valuation, maybe a little bit better valuation, than whatever that round is. So they could get into the company now, but then also, theoretically convert to equity in the future at a better valuation, for the investor.
Okay. Again, a lot of strategies to play with. We got about 8 minutes left, and I definitely want to think from the perspective of our audience. And if I was to kind of go around the horn, from those who just haven't engaged with, someone who can help them in this space, to those who are like, they feel they're on top of it. What is something that they should really start to think about that may be a new policy, old practices? Tanner, I'm going to start with you because I'm going to ask you from the perspective of those who are just like, it's not my time yet to talk to these guys, but yet you want to plant a seed. What should people in the very, very early stages of engaging with them or someone in this space start to think about?
Yeah, I would say if you think it's too early, it's never too early to have a conversation. We're open to it. We spend a lot of time just very consultative calls with clients and prospects. And if on the other end, if you think you know it all, you don't have to worry about that. We can double check, right? So whichever side of the fence you sit on, we're happy to take a look and see if we can add value.
Yeah, I think I'm going to have that conversation with you because I need to talk a little bit about Silicon Valley Venture LLC, and yeah, we're going to have that conversation. Tony, your perspective, say, there's, a startup they've just got funding or they're looking to get funding. What are some of the top of mind thoughts that they should be considering in approaching a conversation with you?
Yeah, I think just to kind of build on what Tanner said, it's a comfort level, right? You have to be comfortable with who you're working with, and it doesn't hurt you to reach out to somebody and just talk to them, see what they could do for you, see what, we get on calls all the time. And maybe it's not the time, right? But you got to think about when you think you're going to start making money, when you're going to do a raise, when you're going to issue equity. Those are the things that you need to plan in advance because it's going to affect you from a tax perspective, and we can help you plan accordingly. If you're thinking about exercising, right? Things like ultimately, when are you looking? What's your long range plan? I think Dan mentioned it before. What do you want to do here? Is your plan to sell? You may change that plan, but it's something to talk about. But it's a comfort level in dealing with somebody. But you want to think about, what do I need to know now? We can kind of walk through that. What are your plans? What do you want to do? And just kind of gather all that information to help them come up with a plan and a structure that fits them best. There are some that pre-revenue and they're like, at this point, I'm going to hold back, but keep in touch with you over the next couple of years or whatever it may be and circle back to you as things keep moving. Our suggestion is always to kind of utilize that person that you like more in advance of that, but that's something that you need to think about.
Yeah. I'm going to ask the same question to you, Dan, and let you answer it, but I'm going to put a little twist on it. I come to you, I'm at X stage of my company, and I don't know the right question to ask. What question should I ask at X stage that would then kind of prompt you to have what we've already discussed here, to have deeper conversations that are meaningful for a particular startup founder? So
you may have asked the question without realizing you asked the question, Brian.
Yeah.
So I get the question all the time. Tell me what I don't know, or what don't I know? Ask that kind of question. So I think that'd be it. What don't I know? Kind of educate me. A lot of times you need sort of like, a little bit of the background and things like that. But, I don't think there's like a sort of this magic bullet, magic pill, so to say. It's just, just communicating.
Yeah. Brandon, you didn't think I'd leave you off the map, but did you? What am I missing from your perspective? We've had conversation. Brandon's back there with Brian. Am I leaving anything out?
No, I don't think so. I think just having a conversation, a lot of pain points out there that you may not know about.
Yeah.
Talk to the experts and we'll see how we can help.
I love that, the pain point. So Brandon suggested the pain point. And so someone comes to you with hair on fire, if they had it. What are some of those hair on fire questions that you often get?
Good question. A lot of times, it's about the biggest one that I probably get every day is, am I a qualified small business stock? Or I have, this specific pattern. Could I qualify for this qualified small business stock exclusion under Section 1202? So a lot of the work that I do specifically is trying to, help founders position the companies and themselves for them to get this benefit on a liquidity event. So
yeah.
I would imagine also that one of the things that you get, and correct me if I'm wrong, is I called you too late. Now can we go back and change that?
Always. Hey, this is where I'm at. I have something going on tomorrow or next week, Brian, and yeah, help me out.
Yeah, we already did it. We already did it wrong,
Yep.
or filed it wrong, or we're out of compliance or something. How much power do we have to go back in time and fix it?
Yeah, it depends on what it is, right? To Dan's point, there's no magic question you could ask them. But at the qualified small business stock, for example, a lot of them, okay, what's my next step? And we already find out that you don't qualify, and then the hair's on fire, right?
Yeah.
Another area I see it is just with tax notices. Well, a lot of prospects get it. Like recently, I had somebody come with a tax notice where he owed a lot of money, and they're not the worst thing in the world, right? The notices, you can deal with them. So because to your point before, I think you said it, Brian. Working with the IRS and things of that nature, people get nervous. So I think, Tanner, you might have said it, but they get notices and they think the sky's falling, right? It's not, you just deal with it. You step back, just relax. And that's something that we see.
Well, I think that's what a lot of people may be listening, and maybe I'm just speaking for myself. It's like the IRS they're out to get me. And if I mess up, I'm done for.
Right.
But that's actually not the case.
Correct.
There's things that you can do. There are safeguards to keep you from really crashing and burning. And so what would you say to somebody who may have this, like, they're out to get me mentality? Not to, again, get too lax, right? But yet people come with hair on fire. They come with issues, and there's always a next step, right? And so what would you say to somebody who have this, like, no, they're out to get me mentality?
Yeah, they're not sending you to jail tomorrow. Maybe 6 weeks. No. But no.
You can say goodbye to your family.
Yeah, you can get your affairs in order. It's time. No, just step back. Let's look at it. Give us a chance to look at it for you and figure out what's going on.
Yeah.
And then we'll help you through it. And, if you owe money, you figure it out.
Yeah.
But they're not going to send you a notice and 30 days later come, put you in an orange jumpsuit and send you to jail. It just doesn't happen.
FBI, open up. Yeah. All right.
So, that's what we kind of walk them. Just make them feel at ease, right? And we'll get it done. We'll figure it out.
Oh, I love that. Okay. Before we sign off, how can we connect with you? Tanner, I'm going to start with you. Where are you based? How can people connect with you? And then give, a little high-level takeaway of anything you want. And we could talk about, I don't know, Thanksgiving turkey. I don't know what you want.
Yeah, sure. So I think first I'd say thanks for having us, Brian. It's great to see you. I think it was a great show. I'm glad to have Dan and Tony out here on the West Coast. But I live in San Francisco, so if people want to connect with me, I'm at a lot of founders events, pitch events, networking events. I'm active on LinkedIn. And key takeaway, I think just be proactive instead of reactive.
Yeah.
Right? Don't wait until you get the letter from the IRS. Give us a call. We'll have a quick conversation. If we can help, we can. If we can give you some value or some tips, for that's fine. If not, no worries. But don't wait.
I love that. Well, Silicon Valley Venture is definitely going to be using Withum moving forward. Tony, how can people connect with you and kind of a high-level takeaway?
Yeah, same website, email, phone numbers are on there, contact information, the Withum website. Happy to chat. We take these calls all the time, and to your point, we'll talk to people. You just gotta I'll go back to saying if you have to feel comfortable, right? But the takeaway is that you should reach out to somebody, and if it's not us, it's somebody else. That's fine, but you should be having somebody help guide you through the process. Obviously, we'd love that, but I think our website, where you can get our contact information. Just, again, shoot me. If you get Tanner here in San Fran, he can reach out to us however you want to do it. So we're out there.
Love it. Love it. Dan, bring us home.
Yeah, so I'm in the Princeton, New Jersey area, but nowadays sort of can kind of get in contact globally. The key takeaway I would say is don't do your own oil changes. Don't climb on a ladder onto your roof if you don't have to. And I think there's going to be stuff that constantly comes up. It's not like, hey, there's this one fix that's equal for everybody. So a lot of things, there are custom approaches to it. And we said earlier, there's a lot of stuff that we don't know. So I think it's making sure that you build a team around you of, I'll say, trusted advisors. We always talk about sort of the trifecta: the attorney, the banker, the accountant, right? But there's so many different services that startup needs now. There's so many things that they may think they want to do in house. Maybe they can sort of bring that stuff in, but leverage it. So I think it's just trying to figure out, hey, what are we actually good at, and then how can we figure out how to give value in other ways.
I love that. That's a great wrap up. Like, just have those conversations and stay informed. Don't wait until that sense of urgency and the hair is on fire. And so I'll leave all this contact information in the show notes. But those of you who are listening, start building your tribe, your trusted advisors. Start having those conversations. You're not committing to anything. You're just having conversations. So that would be my takeaway. Brian, how do we do?
Can
I say badass on the radio?
You can multiple times.
There you go.
Yeah.
I think it's a great call, and also I just want to throw in there, if your tribe is not performing to the level that they should be, or that you feel like they ought to be, maybe it's also an opportunity right now to look at other people for your tribe.
Yeah, stress test your own intelligence as well as others. Right. Have the conversation. I think that's the theme today. But yeah. I want to thank you all for being here today. Brandon,
Thank you, Brian.
Next time, don't monopolize the conversation back there, okay, buddy? All right. We'll see you all soon. Thanks for joining us. Be safe.